tax preparation. Oops. My name is Kate Brennan. I am a program manager at Global Detroit, and I want to welcome all of you to our tax preparation workshop 2022. For those of you who are not familiar with Global Detroit, I just want to say a few quick words before we get started. Global Detroit creates strategies to strengthen the region through immigrant inclusion. The Global Talent Retention Initiative connects Southeast Michigan companies with international students and graduates, filling critical talent gaps. Our programs include an intensive Global Talent Accelerator, as well as workshops, networking events, and other career building opportunities. We also support Southeast Michigan employers with trainings and resources on immigrant regulations, hiring processes, and other topics that will help them to attract and retain top talent and help make Michigan a global business leader. Our next workshop I want to announce before we get started is on March 25th, hosted by Hello West Michigan, and it's going to include employers, as well as information on opportunities for careers in the western side of the state for all of you international students. So you might want to put that on your list of things to do, and you should have already received an invitation. I believe it went out yesterday. Before we get started, I want to let you know we are recording this workshop and it will be on our YouTube channel. We are also going to be getting a packet of information from our presenters today that will be emailed out to all those of you who registered. So you should get a pretty comprehensive piece of information for you moving forward when you're trying to do your taxes. All right, let's get started. Today, we are happy to have two experts in international tax compliance from Moore Doeren Mayhew. Steve Wedge and Joshua Curtiss have a combined 20 years experience, and they're here to walk you through everything you need to know in order to prepare your taxes this year. So I'm going to be paying a little bit of attention myself because I haven't done mine yet. So without further delay, let's get started and welcome Josh and Steve.
Thanks, Kate. Thank you everyone for joining. We appreciate and understand that it's kind of a big ask on a Friday afternoon right before the weekend to sit down for an hour and a half or two and talk about U.S. taxes. But I promise we'll try our best to keep it not only informative, but maybe a little entertaining. And then also, by the time that we're done, I recognize that many of you, may just be students, engineers, doctors, professors. But at the end, if you're interested in tax, send us your resume because you'll be experts by the time that we're done. But in this area, as Kate said, Josh and I, we both work on international as well as domestic issues. And just to kind of set the stage here for a moment, the tax in general is a very, very expansive area. And then of course you have a whole nother area that's international tax. And then one of the, subsets of international tax is this international tax area with regard to students. And so it's extremely specialized. I'll admit we don't see it a lot because most of our clients have already graduated. But we do see it, from time to time, and certainly we know a lot of regular international issues. So just to set that stage, it's highly nuanced. We will leave you with a lot of resources to look at. The IRS has gotten much better over the years at providing resources that are written in plain English, so you don't have to go into legal jargon, code, and regulations to try to lay it out. Every year it gets better. But the purpose of this presentation particularly is with regard to students and trainees. We're trying to cover the the biggest swath that covers most people, right? Most people on this call generally I'm a student, I'm here on my visa, I may have worked and I have to file returns. What do I do? But one thing you'll realize as we go through this presentation is, with tax, you have rules, there are exceptions to those rules, and then there are exceptions to the exceptions, and that can be, on and on and on. So the possibilities are endless. We'll try to cover the biggest group of folks that are on this line. And then, of course, at any time, ask questions. I'll be watching the chat, and we'll likely save them to the end. But if it makes sense to interrupt and jump in, then we'll do that. So with that said, I will pass it along to Mr. Curtiss.
All right, thanks, Steve. Let's get started. Oh. All right. So in the US, there's two types that you want to look at, a resident and a non-resident. The US is a unique country because they tax individuals on worldwide income. So as a resident, you get taxed on worldwide income, and you're allowed certain worldwide deductions and credits. And you're also subject to disclosure on non-US assets, which means foreign bank accounts, any foreign businesses, foreign insurance. And then as non-residents, you're only taxed on US source income. The downside is you're limited to your deductions and credits that you can take on the return. So the common one that's asked, can I get a tuition credit? The answer is no if you're filing as a non-resident. But the upside is that you are not subject to disclosing your non-US assets, which is a good thing because it can get really complex really fast. So when filing as a non-resident, you'll most likely have to do married filing separate if you're married or single. You won't be able to file a married filing, joint filing non-resident return. The benefits to being able to file a joint return is you have wider brackets, which basically means that you're gonna be taxed less as you move up the brackets, and the thresholds are wider than someone that is filing as separate. You're allowed a standard deduction, where married filing separate, the same amount of income will be taxed more generally, and you're only allowed itemized deductions as opposed to taking the standard deduction. And the most common one is having your state taxes withheld if you worked. That would be taken as a deduction in the current year. So how do you determine if you're a resident or non-resident? Well, the tests aren't as simple. If you're not a US citizen, so if you were born in the US and you've been here your entire life, you might not even realize this, but you're already a US resident, tax resident for tax purposes. So if I was to move over in Europe for a while and work there, the US would still want their fair share and I would still be taxed on that income. Now it's a little bit different for people that are not US citizens or green card holders, because there's this magic 183-day rule, where if someone comes in the US and if they spend 183 days here, they'll be taxed as a resident. However, for students, teachers, and trainees, or people that have visas of F, J, M, and Q, there are, as Steve was saying, there are exceptions to the rules, and this is one of those exceptions where even if you exceed that 183 days, you would still be considered a non-resident for US tax purposes. So how long can you do this for? You know, how many years? Because it's not unlimited. If you're a student, if you're in the US for any part of a calendar year, that counts, and you're allowed 5 calendar years to exempt your days of presence. So for example, if you come into the US in 2015, you'd be able to exempt and basically be a non-resident all the way up until 2020. For students, it's still a little bit interesting though, because if you are going for more than a bachelor's or master's degree and you're still considered a student, based on certain facts and circumstances, you might be able to claim what's called a closer connection to your home country and still continue to be treated as a non-resident. It is a case-by-case scenario, and it's not really a blanket statement. But the important thing to know is you're allowed 5 calendar years to exempt your days and be treated as a non-resident if you're a student visa holder.
So to just jump in real quick and kind of do a quick summary of what Josh just said and try to, get you with the takeaways is in the US system, what determines someone's residency is you're either a citizen, green card holder, or you've spent enough time here, right? And so you look at the rules and you see it and yep, I spent enough time here. But the trick is when you have one of these special types of visas, the FJM or Q, although you're here for tax purposes or for purposes of determining whether or not you're a resident, you don't actually have to count those days. So it's what I call you're here, but you're not here. And that can be extremely confusing, especially when you start working your way through instructions to forms and publications that talk about all these tax rules. And if you read it real quick, you just start adding up the days. You say, oh, I guess I'm a resident. And we see this and hear about this all the time, where you have all these folks that are filing these tax returns as residents, although they really shouldn't be residents, and then not understanding that the consequence of that is if you file as a resident, that you have other worldwide reporting obligations, right? So the takeaway here is that while the general rule says you count your days, understand that with these special types of visas, you don't actually count your days. So when you're working through instructions and things, try to keep that in the back of your mind.
So next, we're going to go over the different types of income, the taxability, and then the exceptions. So you can see on the screen, we're going to touch base on U.S. scholarships, wages, CPT or OPT, which is a temporary work authorization. And we will also take a look at teaching or researching as a condition of receiving a scholarship. So, and then as well as treaties, which are exceptions to the domestic tax rules. So scholarships, what is a qualified scholarship? A qualified scholarship is basically a degree candidate. So if you have a major program that you're going towards for your undergrad or your graduate degree, you would be considered a degree candidate. And these amounts that you receive as a scholarship would be considered not taxable, not includable in your income, so long as you spend them on things such as tuition, fees for enrollment, lab fees, books, or any supplies that assist you with your course, essentially. So what's a non-qualified scholarship that you might receive? And if it's non-qualified, it would be taxable and includable on your, in most cases, the 1040 NR. Any scholarships received for non-degree candidates. So if you're kind of just taking classes here and there and you're not really sure of a program or degree yet, and you're not on some type of program, then the scholarships you would receive would be considered taxable. And then any amounts of the scholarship that you use for things like room and board, travel reimbursements, other incidental expenses, or if you decide to go out and blow your tuition on a month-long cruise, then it would be considered a non-qualified expense and you would be taxable on it. There are certain sections in the IRS code that can eliminate some of these taxations on non-qualified expenses, but it's totally dependent on a case by case in facts and circumstances. So if you're one of these people that have received a qualified scholarship, don't expect, and you're in a degree program and all that stuff, and the school might, apply the scholarship directly to your tuition. You won't receive any IRS forms or government forms. You might receive a letter from the university indicating the payments were qualified, but besides that, that should be it. If you are a recipient of a non-qualified scholarship or a non-degree candidate for a scholarship and you're receiving this money, you will receive a 1042-S, and this will have the amount of the scholarship that you received on it, as well as any tax withholdings that may have occurred. The typical rate is 30% withholdings. So if you were to get this 1042-S and you're thinking, wait a minute, I'm in a program and I use this money that I received for tuitions and books and they withheld tax on it. Well, there's a certain section of the forms, which we'll go over later, that you can essentially put this on your return, exempt the income, and then get that 30% withholdings back. I'm assuming this is probably a rare case, but if it does happen, then that's what you want to do to file a return to get your a refund of that money back, or else the government will just keep it forever. So the different types of wages, it doesn't really matter what you call it, whether it's a temporary work authorization to do an internship or training with a local company, or you're providing services as a TA, or you're a research assistant at the university, and the condition for receiving that scholarship is to work in these positions, that would still be considered taxable. So think about it. Any single time you provide a service for somebody else and you're getting paid for it, it is going to be taxable, and you will have to file a U.S. return to report that income. Even if you're claiming a treaty position, which we'll get into later, to exclude it. And also you might want to file, even though you think you paid in enough taxes, because you never know, you might receive a bigger refund than you thought. So when you're getting into your initial employment and you get hired on, you'll get a bunch of paperwork, and some of the forms that deal with payroll are Form W-4, which tells your employer how much withholdings to withhold from your paycheck. And there's a special notice that you can look at that are instructions for non-residents, because all the general instructions on the W-4 are for people that are generally a U.S. citizen. So the reason why you want to get this right is, let's say, for example, just based off of the rules and the treaties that you can exclude up to $10,000 of income. This is just a hypothetical example. Well, you should make sure that you tell and coordinate with your employer to not have withholdings on that amount, especially if you need the money at that point in time, because then you'll have to wait till you file your return in the next year to get that money back. So the tax forms that you'll receive from an employer for working is called a W-2, and that form will report all your wages that you earned and all the taxes that were held. This includes the federal level, the state level, so Michigan, and any of the cities that, whether it be Flint, Detroit, Grand Rapids, that have a city tax. All that information will be on the W-2. Another thing to note is because you guys are temporarily here and your intent is to be students or teachers and trainees, your wages are most likely not going to be subject to our Social Security tax and Medicare, FICA is what we call it, regime. And the reason for this is if your intent is not to stay here, why would you pay into a system that you're not going to receive any benefit from? So there are these special rules that exempt you from wages on Social Security. And we'll get into an example later of what happens if your employer ends up withholding these taxes and how to get them back. So treaties. What is a treaty? A treaty essentially overrides US domestic law, so it trumps it. Whenever we're taking a position on the return, you first look at domestic law, and then you can also look at the country's treaty with the US. All of them are different, and each one of them are negotiated differently. So depending on where you've come from, you will have a completely different tax treatment than somebody else. So if you're talking amongst your friends and you're coming from South Korea and they're coming from India and they said they did their taxes this way, well, it might be different from person to person based on, like I said, what country they're from, because each of these treaties each of these treaties are different because they're from different countries, and not every single country has a income tax treaty with the US. So that's something to keep in mind. The benefit of these treaties is they can provide stuff such as exempting students from taxation on, let's say, the first $10,000 of wages if you're a student. It could be that they'll allow you to take a standard deduction, which is about, I think it's $12,500 now if you're single, versus taking the itemized, which is only going to be your state tax and city tax withholdings.
Josh, before we get to some of the treaty positions, again, I'll do a quick recap, and then there's a couple of questions I see in the chat that I might address. So again, there could be a few forms that you receive in the mail. Some of those forms may apply to you, some of them may not. So if you get 1098-Ts, generally those don't matter. But in scholarships, as long as the broad part is, as long as the scholarships are used for what scholarships are supposed to be, qualified expenses that we've covered, then it's generally a non-taxable event. We could also understand that, hey, I get a scholarship and they can come in many forms. So one form might be, here's your scholarship, and we being the university might automatically apply that to your tuition, right? So if tuition was $10,000 and we gave you an $8,000 scholarship, then we're going to already offset that tuition payment, and then you pay the difference or whatever. If the scholarship is just cash given to you, then the university might not know what you've used it for. So in some of those cases, and it's rare, but we've seen it from time to time, since they don't know whether you've used that money for qualified educational purposes, then they might still issue you a form indicating it's taxable, and then you would be left on your tax return to explain to the IRS that, hey, I use this for appropriate expenses, and so I can claim that it's not taxable. Every so often it happens, but it can. Then, you know, obviously if you're here and you're working, then your employer will issue a W-2 for your wages and withhold taxes. I've seen a couple of questions here in the chat that talks about Social Security and Medicare. So, and there's a slide a little bit later, but if we're talking about it, we can address it now, which is, as you know, typically the rule is if you're working here that you're subject to tax withholding, and that would include Social Security and Medicare. And also understand that, you know, the US is what we refer to as a self-reporting system, which is much different from many other countries, if not most all other countries on this planet. So most countries, it's very straightforward. Taxes are not as big of a deal as they are here. You do whatever you do, your employer withholds whatever they're supposed to withhold, and at the end of the year, you file this return and it says yes, and the government comes back. Here in the US, you have some latitude. You can tell your employer, you know, what taxes they can and cannot withhold. The tax rules are voluminous and complex, and not all employers, you know every area of this. So it's not uncommon for employers to treat you like you're a regular employee, but you're not. You have this special visa. So it's almost like many times you have to be more educated in this area than your employers, because they might not be that educated in this area because they don't have to do these special things and they might not even know about them. So the Social Security thing is a common one where it gets withheld. We'll touch on it a little bit later as to how we can get that back. One of the questions I saw was, you know, a person said with OPT, I've seen sometimes employers withhold it and sometimes not. When you submit these forms that we're going through, and I think maybe we're coming up on them just in a little bit.
Yeah, it's the next slide.
The next couple slides, you would submit these forms before employment. That's the beauty, or maybe not the beauty, the opposite of beauty of the US system is you have to do it in the beginning, because if you don't do anything, then the employer is going to do whatever they're going to do. And maybe it's right, maybe it's wrong. If you're with a large company or a company that deals with, you know, large numbers of students with these types of visas, then they might already know what to do, but not everybody does. So one of the takeaways with this presentation as well is, you know, maybe you got burned on your first job, but your second job, if you follow what we were laying out here, is you can kind of get ahead of the game and stop the Social Security taxes from being withheld if they're not otherwise ordinarily supposed to. Again, with this F visa, or as long as you tell your employer that, you know, hey, I'm here on OPT or CPT, and I'm here legally on my F visa doing what I'm supposed to be doing on my F visa, and this employment is part of my training and my education, then you just have to tell the employer that, and they should, you know, should turn it off. Usually where we see this is you folks take the initiative to tell your employers, and then some of those employers might be our clients, and then we get emails saying, I had this person come to me and tell me that they weren't subject to Social Security taxes. I've never heard of this. Is this right? And so then we tell them, well, yeah, as long as you get the right questions, that's the case. The other a question is, an individual said, I submitted my W-4, but I'm still getting deductions for Social Security and Medicare. The W-4, unfortunately, is only for income tax purposes. So that is only income tax withholding. It doesn't cover social taxes. So the next slide will show the forms that you can do to do the social taxes, or even a conversation or communication saying, hey, this is my OPT, I'm here on an F visa, you know, I don't believe I'm subject to Social Security and Medicare taxes, and then just, you know, tell the employer. Let me see if there was one more that I saw. That's it for now, Josh. We'll cover some of the other ones, like a child tax credit. We'll cover that a little later. And stocks, we'll cover that a little later.
Okay. So when you're doing your research and due diligence and looking into these tax treaties, they're voluminous. There's several different articles. Some of them can span, 50 to 100 pages. The key sections that are relevant to this presentation and to basically student and trainees is the dependent personal services and income from employment section. And there's articles for, it's literally called students and trainees. So you want to look at these two articles to find the information for your specific country and see if there's any tax breaks or overrides of the US domestic laws. And as I said earlier in this presentation, if you're making a treaty position on your return that basically drops your taxable income to zero, you would still need to file a US return. It's required to make this claim. So the relevant withholding forms, the first one is Form 8233, which informs them of an amount for services that you're receiving, or for services that they're paying for, is treaty exempt. So if you're doing your research and you find out that in your country, as a student going to school in the US, if you work here per year, you can exclude up to $10,000 of income. So you'd want to submit this form to your employer, and that would allow for withholdings to not be withheld on the 10,000, and then your withholdings would kick in once you earn over 10,000. Another form is the W-8 BEN, which is used when scholarship income is exempt from tax, regardless if it's qualified or non-qualified. And this exempt income will be issued on a 1042-S. So look out for that form, and it will have the amounts and stuff in there that you can use to prepare your tax return if you're not keeping track of it separately. Some other forms you might receive during tax time, a W-2, which, as we mentioned, reports your wages and withholdings that you've earned for services provided to an employer. Form 1042-S is reporting taxable scholarship income and withholdings. It is also reporting treaty exempt income. And as Steve mentioned, Form 1098-T, this will report the amount of tuitions that you paid to the university, but it is irrelevant for non-resident students because you're not able to claim this credit on a non-resident tax return. So when are you required to submit for a 1040 NR? You're required to file this if you have taxable income to disclose. As I mentioned, if your income's exempt underneath a tax treaty. And the other benefit is if you're trying to claim for a refund, the government won't give you your money back if you've been over withheld, if you don't file a form telling them so. Like we mentioned, because you guys are students, it's a little bit different. So you'll have an additional form when you submit the 1040 NR, and it's called Form 8843. And this is to maintain your non-resident status as either a student or a trainee. If you do not have a 1040 NR filing requirement, you can file this as a standalone. There aren't any penalties or statutory authority saying that they'll disallow your days for not filing it, but as a precaution, we recommend doing it going forward if you haven't done so in the past. So this is the part Steve was talking about with accidentally having Social Security and Medicare taxes withheld from your wages. The forms, so the first step that you want to go through is go to your employer and tell them the situation and see if they can get it resolved on their end. And if they aren't willing to work with you, you can file forms 843 and 8316. And you would follow the instructions, go through the form, fill it out, and send it in to request the refund of social taxes. Some other forms that you might want to look out for is if you worked in a state, which is obviously Michigan, but if you also worked in a city, if you have reportable income, you are required to file returns. So don't just file your 1040 and think you're done. Make sure you look up the applicable forms to the state or city that you worked in. So for the majority of this presentation, we've been kind of looking at the student rules, and researchers and teachers are a little bit different. For students, it's the 5 calendar year rule, but researchers and teachers are only able to exempt their days for any part of 2 out of the 6-year calendar year. An income that they might receive that is typical, that could be taxable, is grants and fellowships for payments of teaching or researching or lab services, any stipend or wages that you receive while performing your researching or teaching duties. And as we mentioned previously, there are different provisions in the treaty that are treated differently for students versus teachers and researchers. So make sure you determine which one you are, and then, which we'll get into a sec, and then look up the applicable treaty. You don't want to claim the wrong benefits. So what if an individual is kind of doing a little bit of both, where they're studying, but then they're also teaching and researching, maybe on the side or kind of concurrently? To determine which treaty article applies, the first thing you want to do is look to your immigration documents to figure out why you're here. Does the document say that you're here to pursue an education and be a student, or are you here to kind of do research activities for the university? So that's kind of one way to make the distinction. And then how do you classify income? And the way you look at it is, if the payment is to further your education, then it may be treated as a grant and the student article would apply. If the payment is for services benefiting the payer, then it would be treated as compensation, and the teacher article would apply. So you kind of got to look through, why are you getting paid, what you're getting paid in addition to determine what that income relates to. If you kind of got like a combination of both, you're studying and you're being a teacher or researcher.
Before we move to stimulus, let's unpack a little bit more of what Josh covered. So again, we have income, maybe wages, or potentially even, fellowship or stipends or things like that. And so the general answer would be, to the extent that I'm earning wages, it's taxable income and I'd have to pay tax, but income tax, but I don't have to pay Social Security and Medicare. So if that's happening, you should talk to your employer to see if you can get that Social Security and Medicare tax back. Once you tell the employer, then the employer would have to, prepare amended payroll filings, recover those taxes, because the employer also pays a portion as well. So sometimes maybe the employer would be interested in getting their half of those taxes back as well. And then once they recover those taxes, they would, give them to you. But not all the time. So if you're talking about an employer, if they have 5,000 employees and you're the only one that has this special visa, they might say that's more trouble than it's worth for us to try to get that back. So we're not going to do anything. And so that's where you would file that form. I think it was the 843 on your own as an individual to make your case or to claim your refund to the IRS directly for your portion of the Social Security taxes. When you read the instructions of that form, I believe it might require your employer, to write a letter, on their letterhead saying, look, we're not going to go back and get these taxes. So please, IRS, refund this student their Social Security and or Medicare taxes that we took erroneously. On the income tax front, again, generally wages are taxable. But the big takeaway here is this talk on treaties. As I said before, there are rules, there are exceptions to rules, and then there are exceptions to the exceptions. So under statute, the wages are taxable, but under treaty, those wages or payments might not be taxable. And every treaty is different and it's country specific. And there are lots of treaties out there. So when we get a little bit later on, we'll show you where you can go to see the treaties. But I, kind of call it like a cookie jar or your free money, if you will. Find out what your treaty country is, which is obviously your home country, and then find that treaty. And there's only a couple of spots that you really need to look that generally cover most everyone on this call, which would be, there's an article that refers to students. And then there's an article that might refer to, teachers and researchers. Some treaties might only have one article. Some might have two, or some might put them together. Every treaty is a little bit different. But the point of the treaty is that oftentimes they will serve to exempt a portion or all of your wages. So for example, one treaty might say, hey, the first $5,000 of wages for someone that's in the US on these visas is exempt. Well, unless you do an 8233 at the very beginning and tell your employer, hey, the first $5,000 of my wages are exempt, they're going to withhold on all of it. So, and the other takeaway here is that, again, it starts with withholding in the US system, but it always ends with your tax return. So no matter what happens from a withholding perspective, it can almost always be fixed on a tax return. So for example, you're attending this presentation today and you said, man, I didn't realize any of this was out there. What can I do? The answer is file your return. You can claim the treaty position on your tax return, exempt the income on your return. You're telling the IRS, look, my employer paid me this, the first 5,000 of it's exempt. And then so you subtract that 5,000, calculate your tax. And then to the extent that your withholding is more than the liability, you get it back as a refund. So if you're able to do it on the front end, great. If not, it can almost always be fixed on the back end. With the question with the 8843, if it was missed in the 1 year, as Josh said, the IRS asks for you to file it, even if you don't file a return. But if you miss it, I don't think it's really that big of a deal. Try to do it going forward. They can't, there's really no statutory authority for the IRS to disallow that. I think the instructions try to scare you into that, but I'm not really aware of any actual code or regulation that says if you don't do this, the days get, they're gone forever. And chances are, maybe the reason you didn't do it is because you didn't have to file a return anyway. So it's kind of like, no, not much to lose there. What was the other question that I saw? see here. There was a question regarding a PhD student here for more than 5 years. You know, my taxable, it gets to everything that we're talking about here on the presentation. Everything is very largely facts and circumstances related and based. So what you need to understand, or what we would need to know, and we can follow up too, is what type of visa do I have? How many years have I been here? Right. And then we start working, you know, through the rules to figure it out. And we can, I think with that, move on.
All right.
I'll look one last in that question. I'm sorry. Is, you know, do I file as a non-resident or resident? Again, you have to figure out your visa, how many days you could be considered, or years. You can not count your days here. But again, things are facts and circumstances based. So even though you miss those years, so if the rule is 5 years or the 2 of the 6 years, statutorily, the U.S. is going to say, well, you're not, you're a resident. You can no longer not count your days for SPT purposes. Great. So I count my days for SPT purposes and I'm over the days. Then statutorily, you'd be a resident. Again, there's always exceptions. And one of the exceptions is treaties. So if your circumstances haven't really changed and you've maintained, or you maintain that you have a closer connection to your home country, although the statutory rules would say you're a resident, you could take a treaty position to say, although I meet SPT, I, under the treaty, still qualify as a resident of my home country. So that's where those types of positions, you know, in great detail are not part of the scope of this presentation. We're largely trying to hit the majority of people, which may be in the window of the 2 years for, you know, teachers and researchers, or the 5 years for the F1s. But the takeaway there is that treaties can almost always override domestic law. So if you meet those requirements or qualifications, then that can happen. All right, Josh.
So as everyone knows or has heard, a third stimulus check was released in 2021. The downside is it is only eligible for US citizens or US resident aliens only. The amount of chaos and kind of administrative nightmare that went on with these is all over the board. So it is completely possible that even though you are considered a non-resident and not a US citizen, that you might have received a actual paper stimulus check. Or if you, as Steve mentioned, just didn't know the rules of the tax code and you've been filing as a resident tax return as opposed of a 1040 NR, then based on the IRS's parameters, they would most likely either issue you a check or directly deposit the money into the bank account. So there is a link down at the bottom of this slide that talks about the procedures that you can go through to send that money back, because you technically are required because it wasn't paid out. It wasn't meant to be paid out to you. So the two most common ones is if you were to receive a check in the mail, write void on the top of the check. And then when you're looking on that website, depending on where you are, where you're located, you send it to a specific IRS location. Then if you received a debit card, you would receive it, you would send it or mail it to the address on this slide. So starting in 2020, the IRS put the cryptocurrency question that says, at any time during the year, did you receive, send, sell or exchange or otherwise acquire any financial interest in any virtual currency. And they initially had it, I believe, in 2019 in one of the underlying schedules. In 2020, they moved it to the front. This is important to answer this honestly. As tax professionals, you know, we always proceed on the side of caution. And this looks very similar to kind of a setup to what they did with foreign banks and Swiss banks accounts with people hiding their money and stuff. And a lot of people got in trouble with that. So it is extremely important to answer this honestly. And we're going to go into it a little bit, but this is outside the scope of the presentation. But we just wanted to make everyone aware that this question does exist now and to answer it honestly and report any income that is associated with it. So virtual currency and its taxability to non-resident students. If you receive cryptocurrency for services provided, you would treat it like wages. If you were to buy and sell, you would treat it like property, kind of like if you've sold a stock before where you would report it on Schedule D. There is this complex concept of what's called a tax home that is extremely complex and is only based on court cases. And it's basically we have to gather all the facts and determine where your tax home is, and that determines whether or not the sale of your cryptocurrency is taxable here in the US. Basically, this is just a disclosure slide that, and I'll read the last paragraph. These rules and determination of US tax liability of capital gains are extremely complex for individuals and are based on facts and circumstances. This topic is beyond the scope of the presentation, and if you do have any of these transactions, we highly recommend that you seek a qualified tax professional. If it's not us, it can be, you know, someone else, doesn't matter, but you should definitely reach out to someone that does it professionally. So in the packet that we will send out after the presentation, it'll include a couple of these forms on the screen that we'll go through in a moment too, the 1040 NR, the 8843. And if you want to learn more about kind of how this all works, the IRS publishes publications on certain topics, and they kind of go over the rules of how they treat stuff. So publication 519 and 901 have some good stuff in there that talks about taxing non-residents and US tax treaties. And the rules are different for state and city levels. So make sure you look up the instructions for the specific state forms. Same thing with the cities. Here are a couple different websites. You can just go to the IRS's websites for printouts of any publications or forms. There's another link too that links to all the different treaties the US has with countries. And then Michigan forms can be found on the Michigan link. And you can search. So that concludes the presentation. I don't know if you want to add another kind of quick wrap up, Steve, and then we were going to take a the way that this is going to work. We take about a 10-minute break, and then we'd come back. We'd go through the kind of mocked up forms. So we got a mocked up 1040, and then we can go over any comments and questions, or we can do it the reverse, however way you want to do it, Steve.
I think we could just keep going. I got a couple of few items I'll address, Josh. So if you want to take your break or wet your whistle a little bit for the form,
Josh?
we can do that. And
Josh,
Yeah, my mouth is getting a little dry.
Josh, this is Ann. So
Ann.
word mocked up, explain that that is a sample. You're going to do a sample of what a income tax form looks like.
Correct.
yes,
Not everybody can immediately recognize the word mocked up.
Ah,
Okay, just the thought. All right.
good point. So we've gone through the, kind of the education and some of the rules, and then we will circle back here in just a little bit and kind of walk through what a tax return looks like. So for the individual who asks hey, I'm here on an F1, I have a job, how do I do this thing? We're going to walk through one to where we get something pretty close. What was the question I wanted to do this? So, returns are everything you see is they're e-file, but the software is limited for e-filing of non-resident alien returns. So I don't believe TurboTax supports that. I'm not sure if the H&R Block online one supports that or not. I'm aware that many universities might use a Sprint Tax, I think is one. It used to be maybe referred to as Glacier. The names keep changing, but that's actually a really good software. It is designed for people with FJMQ visas. It asks you a bunch of questions about your visa, when you got here, what you're doing, and it will do a pretty darn good job of filling out those returns. In the absence of that, and I don't know what that would cost, you probably even go to their website maybe and do that.
Steve, Wayne State has the Sprint Tax, and I think the students are available. We have several licenses, so it is available for Wayne State students.
So if you don't go to Wayne State, you should go to Wayne State because they provide licenses for the software.
They do.
But you can do
have
it the old-fashioned way, which is, you download the PDF, you fill it out, and then you mail it that way. The other questions we're talking about, I see, is there's a lot of questions about child tax credit. So let's go through that a little bit. The general rule is non-resident aliens don't get to claim child tax credits. And the reason for that is theory. You're not a resident. So governments generally don't like giving money to folks who are not real residents of the country. And that's kind of the theory behind why that is. But again, every rule has an exception and a further exception and a further exception. So one of the exceptions statutorily is if you're a resident of Canada or Mexico, our neighbors to our friendly and helpful neighbors to the north and the south, is, maybe they get a little better deal than people across the ocean. So they say, hey, if you otherwise meet the criteria, then you might be able to claim, exemptions, or what used to be referred to as exemptions before the Trump tax cuts and rules changed, on your tax returns. But they've changed the child tax credit over the last couple of years. And so the biggest thing to understand is, one, unless you're living here in the US for more than half the year, then, and again, for the residency part, is you have to meet these rules, and the instructions do a very good job of identifying the rules. Is the credit would be non-refundable anyway, meaning, once you wipe out your tax liability, there's nothing more to be had. But generally, to get the refundable portion, is most people generally have to have a social security number. And so a lot of times that doesn't happen. I recognize that sometimes it can happen. You have two individuals who find themselves in college, both on their F visas. They decide to get married, have a child, and so the child's a citizen by birth and the parents are non-resident aliens by their own right. Then again, unless you're the resident. Generally, that's the first hurdle, is you have to be a resident of the US to make that claim for the child tax credit. We talk about these 5 years. Again, things are on a facts and circumstances. So there's a question about 8840s, more than 5 years. We'll show you when we get to the form. But the form basically asks all the questions that we've kind of discussed earlier that walk you through the rules. So the point would be, is if I file an 8840, one of the questions it asks me on that form would be, well, let me get my real instructions, 8840 or 8843, I guess is what we would have to clarify. Because the 8840 is the closer connection. The 8843 is the I don't count my SPTs. So let me clarify this just a bit. The 8843 says I'm here, but I'm not here. I don't have to count my days for purposes of the substantial presence test. And this is the reason why I get to do that. And for most people on this call, the reason you get to do that is because you have an FJM or Q visa. And so if I have an F visa, then the form is going to ask me, well, how many years have you had the F visa? How many years have you been in the US? And so if you answer that I've been here for 7 years, right, and I want to exclude my days of presence for purposes of this test, then the IRS might come back and ask you a question, because they're going to say, well, gee, it looks like you're trying to not count your days for more than 5 years, right? And so you're going to have to explain that to me. The question that I saw in the comments with regard to an 8840, an 8840 is different from an 8843 in that the best example I could give would be someone, it's generally for people who are not students. So people who come over here for other work reasons. Maybe there's a company that, say it's a German company with a US subsidiary. And so the German company would send someone over here for, 4 months or 5 months or whatever the case may be. And so you're employed for a shorter period of time and then you go back. And let's say you do that like 3 years in a row, or while you were here, you were able to stay under other visas. The 8840 is for people who have to count their days, but if they meet the SPT but can claim that they still have a closer connection to another country, then they would use that form. But that form is only allowed assuming that the current year's days are less than 183. So to say that a different way is the SPT has a formula where you count 100% of the current year, a third of the prior year, and a sixth of the second preceding year. And you add all those up, and if it's over 183, congratulations, you're a resident. But what if I go through that test and I'm over 183 days when I look at the last 3 years, but this year, the current year, I only had, 100 days in the US. Well, you could use that 8840 form to say, look, I met SPT or I blew the SPT test, but, I'm really still have a closer connection to my home country and I'd like to be taxed, as a non-resident alien, and here's why. And then, of course, there's still an option that even if you're over 183 days, that you could still claim to be a non-resident, but it have to be a treaty claim, and there's special forms and rules to do that. Another question was talking about stocks. Sounded a little bit, while normally it could be a very easy answer, or it could be a very more difficult answer. But a lot of times the stocks would be based on your residency. So if you're a non-resident alien and you have stocks sourced to the location in which you're a resident, but there is a special kind of 183-day rule separate from the SPT rule that could bring that into taxation, depending on if I have a trade or business or a job, here in the US. My easy advice would be, if you have them and you can, delay the sale of those until you go back, try doing that. Otherwise, if you can or you do, then you might have to, seek some advice to figure out your particular facts and circumstances as to whether or not that may or may not be taxable in the US. Again, it's kind of outside the crux of this presentation, but as you're starting to see, it gets crazy, and there's lots of rules, and once you start changing basic fact patterns, things can start to go off the rails real quick. Didn't file to keep my enter. The question about I didn't file the 8843 last year, taxes with a professional service. It generally won't. I mean, especially if you're within the 5-year period for an F1 visa, we would recommend, doing it with this year's return. And just another note about, we see this a lot and get a lot of questions about it. So people will say, well, hey, I went to a CPA or a professional or whatever last year, and they did or didn't do this, and how's that happen? I'll give you a couple of very easy examples. Anyone who's familiar with an attorney, you could be an attorney that works in corporate services. So, right, you sue for contract breaches, right? 2 large companies, I'm going to sue you because you did not fulfill the contract. So it's corporate law, versus someone who specializes in slip and fall accidents, and sues people personally for injury. I would not go to a slip and fall injury attorney for corporate contracts, right? There are specialties, and CPAs are no different. So healthcare, right? I would not go to a cardiologist to talk about my bone density. There's different specialties, and people specialize in these. International is one that you have to specialize. So if you go to an H&R Block or a Jackson Hewitt, those are generally directed towards US citizens or residents with here's my tax forms, can you do my return? If you have these visas, your situation can get complicated quickly. So these would be the questions for anyone that you're going to go to is I would come right out of the gate and say, hey, I am here on an FJ, M, or Q visa. Ever heard of it? And if they say no, then the next question would be are you going to learn it for me? If they say no, then you go on to the next one. And if you're comfortable with them learning on you, then that's your own deal. But otherwise, I would keep going till someone understands when you yell out those letters that they know what you mean, and that's probably the person you're going to want to have look after your taxes. If they don't, then keep looking. All right, we will go at this point to the forms. We'll give you a couple of tips on what to do. And then again, it's under the guise of, most regular people who I'm here on a student visa and they gave me this W-2 or whatever, how do I do the forms? We'll walk through this. I'll continue to address questions in the chat. And then when we're done, we'll open up for more questions if time permits. So Josh, I'll let you take it from here.
So this is a sample return with kind of comments and remarks of a 1040 NR. And so I'll kind of just scroll down it slowly and kind of go through some of the important spots. So when you are doing a return, or if you pull these forms online, if you're doing it yourself, make sure you have the correct tax year. So you'll see in the upper corner that it's 2021. If you are single, mark single. If you're married, filing separate because you can't file a joint return with a 1040 NR, check married, filing separate. Your identification number, this is either your ITIN or your US Social Security number. When you're filing your tax return, make sure you use an address that the IRS could get a hold of you maybe 3 years down the line. If they send you a notice or what have you, you want to be able to respond to that if it's an issue with your tax liability or whatever the case may be. Make sure, like I said, you answer this cryptocurrency question, yes or no. Dependents, personal dependents and exemptions were suspended in 2018. So this really no longer applies. You don't get an exemption or a deduction for having dependents. And then kind of going into the form, if you earned a wage for providing services, you'll get a W-2 and it would go in box 1 for the taxable wages. And then if you received a 1042-S, you would put the income amount here. And then any exempt amount is kind of further below. That's what this is saying. Enter only the taxable amount here, and then the exempt amount will go in here. Actually, no, I see what you're saying now where this changed a little bit, Steve. So you would put the full amount here, and then you would put the exempt amount here, and then it would exclude it and kind of adjust your income that way.
To come in, I'm addressing a question, but Josh, if you're talking about the example where I got a 1042-S because whoever paid me the scholarship or fellowship didn't know whether or not I expended those monies for a qualified expense, so they issued me a 1042. If I then on my tax return say, hey, what that money that they gave me is not taxable because I did use it for qualified expenses, that's where you'd use the 10C number. So again, in the
Correct.
US, is someone's always typically telling on you. So someone is issuing you a form and they're issuing a form to the IRS. And if you file a return without that income, the IRS is going to send you a love letter and say, hey, we noticed that you received this income, but we didn't see it on your return. So this is strictly a function of, crossing the T's and dotting the I's to hopefully reduce, communications from the IRS. So if the IRS thinks you got $10,000 worth of income, you better put the $10,000 worth of income on your return. However, if you say, I've got to put the 10 grand on the return because it's on a form and the IRS is looking for that 10 grand on my return, but all or a portion of that 10 grand is exempt because either one, I use those monies for qualified education purposes as I'm supposed to, or two, I can claim a treaty to exclude those benefits, then this is where you would make all these corrections. This is where you're filing your return. The tax return is the end all do all document. All the other forms, all they're doing is starting at the front with withholding. So it tells them I've either got to issue a form or I've got to withhold taxes. The tax return is where you're actually telling the government, I received this income, but it's not taxable, and here's why. And when you do that properly and explain it, then generally you come through with no issues. Where it gets a little dicey is if you have a form that has income and you're going to exclude it under treaties, you might have to look at the operation of the form in general, where you put the income on and you put it off, and then you net to the number you're supposed to, if that number is zero or otherwise. All right, that's my 2 cents.
Okay, page 2, line 16 is just the tax. Line 19 is a child tax credit. You can't take a tax credit for your spouse. Line 25A would be where your W-2 withholdings go, and then line 25G is where your 1042S withholdings would go. And then lastly, at the bottom, before you send it in, make sure your signature's on it as well as the date. And then this is so the way the return's laid out is you have kind of the main page, the 1040 NR, and then all these supplemental schedules. So these additional PDFs that I'm popping up are such schedules. So this is Schedule A that, like we were kind of talking about, there's a standard deduction and then itemized. This is the schedule for itemizing, and since it's a 1040 NR, you're going to have to itemize unless there's a treaty benefit. So your state taxes withheld on your W-2 would go here, and you would get a federal deduction for that. This is an additional form that you might see when you're scrolling through the 1040 NR forms. This totally depends on your situation, but most likely has very limited or zero applicability. So we're not going to cover it in the scope of this presentation. So if it's blank, it's most likely correct. And then the Schedule I or OI is basically a bunch of information that the IRS asks you, such as what country are you a citizen from? What is your visa type? Have you changed your visa type in the past? They'll ask you about days that you are physically present. The answer to these questions would be 0 because we're not actually counting your days. There's a separate form that will go through the 8843 where you actually put your real days on there and file that with your tax return. And then at the bottom here, there is information for a treaty position. So let's say in the China and US tax treaty, there's Article 20 that says, hey, students' first $5,000 worth of income is tax exempt under the treaty. So this is where you would kind of complete this information. And then if you're scratching your head at M, it most likely does not apply. It's very limited circumstances where you, as a student, would most not likely have.
To jump in real quick, this is the example of the U.S. returns. Again, we're a self-reporting system. So you are telling the IRS, here's all my income, and here's all my information. Here's the return that I'm filing, you know, a 1040 for a resident versus a 1040 NR for a non-resident. And then the IRS is getting information from third parties, and they're going to kind of corroborate that thing. What you see on this return is where it starts to kind of make sense is they're asking you all the questions to determine whether or not you're filing the correct form. So for example, if on this form and it says, hey, list all the days you entered and exited the US during the year. And so you would do that if you had lots, but most people don't. I mean, a lot of times you're here for like solid periods of time, right? So you go ahead and do that. And then it says, hey, tell me how many days you were physically here for whatever reason. I don't care what the reason was, work, vacation, school, whatever. Tell me all the days you were here. And then let's say, for example, you've been here and you never left for 3 years because you're in school and you never went home. So you'd put 365 on each of these lines. Now, the IRS might look at this and say, well, gee, if you've been here nonstop for 3 years, why are you filing a Form 1040 NR? You sure look like a resident, right? You look like you've met SPP. And that's where you would have this 8843 to say, look, I'm here, but I'm not here. And people might take different positions as to how you actually fill this section out of a return. My personal opinion is if I was including the 8843, that I would put zeros on these lines on this one, because I'm using my 8843 to tell the IRS, here are the real days that I was indeed actually physically here. And I've excluded those days. And I'm doing that on my 8843. And on my schedule OI here on my NR is where I'm showing you the result of those excluded days being zero. Does it, you know, if you did put 365 in each of those boxes, but you also attach an 8843 to explain that, you know, you're not counting those days, would you end up in the same place? Yeah, probably. There probably wouldn't be much because you've given them everything. Now, if you put 365 in all of these boxes, but you didn't attach an 8843, you might get a letter from the IRS saying, hey, we think you filed the wrong type of return or whatever.
And then the last one that,
oh, sorry, I was just gonna say, in this form is where you would also, you know, report your treaty. So we talk about that cookie jar that I was saying earlier is I go to the my treaty for the country that I'm from and what kind of goodies do I get? And oh, there it goes. My country says I can exclude the first 5,000. This is where you're telling the IRS that I am excluding from income $5,000 worth of wages, you know, under this treaty article, and this is the reason why. And then you would go ahead and put that 5,000, same 5,000 on the front of the return. Josh, you still have page 1 of the 1040 NR?
I can open it back up.
I guess I probably have it somewhere too.
There we go.
So when we do this, right, my point I'm getting at is line 1C doesn't actually end up in the calculation of the return anywhere, right? So in a perfect world, and so anyone who ever goes to school for taxes, everything always works out on the final exam, but in the real world, things get really ugly really quick because nobody knows what they're doing. And, you know, you have this amazing effect called human error, companies and employers included. In a perfect world, if everything was done correctly, then what would happen is you would give your employer an 8233 and you'd say, hey, the first $5,000 of my wages are exempt under treaty, and here's the treaty and here's the reason why. And your employer would say, oh, good. So we're going to pay us $8,000 of wages, but we're going to exempt the first 5. And then so they would end up issuing you, you know, a W-2 for only the $3,000. And so you'd get a W-2 that shows wages of $3,000. You'd put that on line 1A. And then on schedule OI that we just looked at is where you would tell the IRS, hey, I've claimed a treaty position. I've excluded $5,000 worth of my income. And then you transfer that $5,000 up here on line 1C and everything would work out perfectly. Well, what if I didn't tell my employer that I get a treaty, right? They didn't know, and I didn't know. I didn't find out till I attended this webinar. So now you're going to claim this position, right? And so your W-2 and 1A would be 8,000. Again, on the schedule OI, you're going to claim the position. You're going to send that 5,000 to 1C. But unless I've mistaken anything, there's nothing on this that actually subtracts 1C from any of the income numbers on 1A or 1B. And this is where you have to make this adjustment, what we refer to as directly on the tax return. Somewhere we have to have a subtraction to show that income. Because if I have a W-2 that shows 8,000 of wages, but I only report 3,000, I might get a letter from the IRS saying, hey, we saw your W-2 as 8, but you only put 3 on your return. Now, if you have the 1C, will they be smart enough to do the math and figure it out? Well, that depends. It depends on a lot of things. It depends on the person who's reviewing the returns. If they shove it into their computer, the computer likely won't be smart enough to figure it out. Most of these notices are automatically generated. So it just looks at your return and does this matching and spits out a notice. If you're lucky enough to get a human being to review the return, you might get lucky and they could put those things together. And that's where we'd probably, if it was me, I'd list some kind of other adjustment on my tax return. So I want to match the W-2. So even though it was 8,000, I'm going to put 8,000. And then somewhere else on my return, likely Schedule 1, that's listed here on line 8, where you can see that we have the comment, is I'd make a negative adjustment for the 5,000. So the numbers would actually subtract. If you look at the way this form operates, line 1C, it doesn't actually subtract anything, right? Look at line 9. Add line 1A, 1B. There's no 1C there. They don't refer to 1C. 1C is literally just an FYI type thing, right? Because it's assuming that everything was done perfectly. The wages that are reflected are the net wages subject to tax. But that only happens in dream world, where somebody shows up at the very beginning of this process and gives their employer or the university an 8233, and that hardly ever happens. So understand that line 1C is just for FYI. It just shows the number. It doesn't actually, if you look at the operation of this form, it never gets subtracted out on your return. You'd have to make some kind of manual adjustment. And that's what this box in the middle of the screen that Josh has there for line 8, to reduce the possibility of a correspondence. We'd say, hey, I would put an adjustment. I'd do a Schedule 1 that's in here and maybe subtract that out. I don't know if we have a version of Schedule 1, Josh, but
I do not have it.
it's all right.
You want me to pull it up?
You can, but let's go through the 8843. Unless you want to pull up the Schedule 1, I guess you could. Where'd it go?
So this is the form where you would actually count your days. So you'd fill out the general information at the top, and then you would pick either part 2 if you're a teacher or trainee or researcher, and then part 3 if you're a student. And these are the actual days of presence for each year that you would fill out. And then there's some general questions. And it does ask you if you've been in the United States for more than an extended period of time. And then it kind of talks about exceptions and see instructions, and then it'll talk about closer connection for students. So if you file this form and you've been in over here for more than 5 years and you don't answer the questions properly and provide the right information if you're making a closer connection, like Steve said, this may trigger a notice. And then the rest of it, the parts that don't apply to you, you don't need to fill out. And then you only need to sign this portion here at the bottom if you're filing it separately and you're not filing it with your tax return. This is what you wanted me to bring up, right, Steve?
Yes. So again, if it was me doing that return and I was going to do that and that was in my return, I would probably list another income item on, what is that, 8Z? And then that's where I'd make a negative for the 5,000 so that the numbers would work out. Because right when you look at this form, at the bottom, it says add up lines 1 through 7 and 9, and then send this number to the 1040 NR line 8. So if you go to the 1040 NR line 8 that we had before, and you put that negative number, then when you add these lines on the tax return, things would start to make sense. So if line 1A in my example previously was 8,000, then line 8 is a -5 because you're claiming the treaty, then you net to that proper $3,000 figure that you should. Putting the 5 on 1C is required because that's where you're substantiating or claiming the treaty position, but it doesn't actually, if you look at how the form operates, that subtraction, that never shows up anywhere. It's just hey, I'm excluding 5,000. To physically, if 8 minus 5 equals 3, you'd have to do what we were just describing. 8's on 1A, the -5 is on line 8, and then you net to a 3 because that's the result.
Any more questions come up in the chat, Steve?
I think I've addressed most. There were some folks, we have some time. You could keep asking questions and we can deal that. And some people want to do a mic. So Hassan wants to ask a question with the mic. If you can unmute Hassan.
Hi, hello. Okay, so I have actually like 3 or 4 questions. If it's okay with you, I'll just go through them quickly. So I have intently seen your whole webinar and it's quite informative. The first thing I would like to ask is the joint tax return. Like my wife is my dependent and my child is my dependent as well. And they do not have any SSN, I do. So in this scenario, do I still apply like jointly, or I just do it singly and just mention them in my dependents right now in the 1040 NR form in front of us? So I just
you have the social, they don't have a social. What's the visa? F?
I have F1 visa.
So
and they have F2.
The other thing you'd want to look at in your particular case is what's the home country?
It's Pakistan.
Pakistan?
Yeah.
That is not going to be one that would get that. So because so the short answer to your question is you do not claim any quote unquote dependents. There's no child tax credit. You would report yourself. Are you married? Did you say that?
Okay, yeah, I just say married filing separately, right?
Yep, yes, you would be married filing separate. Your only U.S. source income would be whatever your employment income is. And then if your wife is not employed, then she doesn't have an obligation to file a U.S. return. So you would just file your own return, married filing separate, no exemptions, no credits, put the wages on there, unless you qualify for a treaty. So for something. So I would encourage you to look at the U.S. PACI treaty if you have one, and then, hey, there might be something that in the cookie jar there for you that you could possibly exclude. If not, then you put the wages in, calculates the tax, we subtract the withholding from it, and there's your result.
All right. Okay. So that was my first question. The other question was, when I came here, I took some money from my savings to go through my expenses. So by the end of this year, they were a little more than $5,000. So I got an email from, not an email, like you can say letter from bank saying that you need to report something that you had more than 5,000. So I think that thing was maybe not covered in this slide. So what should I do with that? Like, because right now I'm just using that money to support my dependents and just the daily expenses. So
I mean, it's hard to address the question because I don't know what the letter says, but it sounds like it's a banking issue and perhaps not a tax issue. If there was any tax issue, a third party
they said that you have to report to IRS that you had more than 5,000 at the end of this year, something like that. So is there anything like that?
I would have to see the letter because, like I said, if there's any income then the third party would report the income and they'd issue you a tax reporting form. So say a 1099 INT for interest income. So,
No,
you know,
that was just my savings, which I brought from my country to go through. So no other income than my current employer. Like I'm a GTA at my university. So
right, just transferring money from one account overseas to a US account in the US.
yeah.
It's not a taxable transaction. It could be a letter just to say, hey,
Oh, all right.
you know,
So
you
it could
might
be
have
just a
income.
yeah.
You might have income that might be subject to tax. You might want to consider putting this on your return. Talk to a tax professional. It could
All
be
right.
something
So
like that.
the other question was about the ITIN. So I have SSN. So do I have to apply ITIN, or I just apply with SSN and they will do it automatically, the ITIN?
Well, I guess I have to understand the question, but if you have a social security number, then that's the number you would use for any tax filings.
All right.
If you don't have a social security number and are not otherwise eligible to obtain one, then you'd have to apply for an ITIN. So generally speaking, most people will have a social security number because you wouldn't really be allowed to work without one. That's kind of the point. So most of the time, 95% or better of the time, you know.
Now I understand, because someone was telling me that I should apply ITIN for my wife because she cannot have SSN because she's my dependent, and you can like fill the or do the returns jointly. So what should you recommend me as a student? F1, my wife F2. So should I do it? Like, is it important for her to like return, or you can say file the returns, or she could just skip it or ignore it, or I just do it myself? What's your opinion?
The ITIN is, again, anybody who's files a tax return or is listed on a tax return has to have an ID number. And that ID number is either a social security number or an ITIN. In your case,
don't have either.
Right. In your case, if you're a non-resident alien, then be the only person that has to file a return, provided you're the only person that's earning income. If your wife's not earning income, what you've just described is what we see a lot of the times. People say, I'm going to file jointly with my wife. You can't do that unless you're both residents of the US.
All right.
Your visa is telling you that you're not a resident of the US.
All right. So that makes it clear. And then the health insurance form 1095. I think that was not.
Doesn't mean anything.
Okay, it doesn't need anything. And the last question about the crypto, I just did some experiment and lost almost all of it. So I didn't make profit. I even had the, you can say, losses. So in that case, should I return, like say that I have been exposed, or I just skip it, or what should I do? I have the proofs that I was in loss all the time.
That opens many cans of worms. The point is, if you sold it, you probably have to answer the question. If you sold it and your crypto's held on a brokerage account like a Coinbase, they would issue you a 1099 B as in boy, likely, to report the proceeds. And then this is where it comes into facts and circumstances to look at some things. As to, one is you got to kind of fix the reporting, and then two is determine whether or not it is or isn't taxable. And I could talk for 5 more days on that topic. So it's just, there's other people that have questions. So
yeah, okay. Thank you a lot for your time. Really appreciate it.
You're welcome. Akshita, I saw your hand go up first. Go for it.
Hi, good afternoon. Thank you so much for doing this tax workshop. I know I'm going to be walking out of this with a bucket full of information. So thanks again. So my question is really pertaining to my STEM OPT and taxes. So just to give you a quick brief, I graduated in 2019 and I've been in Michigan for a little over 6 years now. And I've been working full-time since August 2019. And so in 2020, that was basically like my sixth or like probably the end of my fifth calendar year in the US. So what has happened is my employer at that point in time, they never really deducted anything for Social Security or Medicare taxes. I was exempt, even though I was living here for more than 5 years. And then my employer after that, I just left that job and joined my current employer. But my previous job, they refused to. So I basically argued with them that I think I'm still exempt from paying those taxes because that's what I'd heard. And they maintained the argument that I wouldn't be getting a refund and that I'm not eligible to expect a refund for my Social Security and Medicare taxes. And then now there's my current employer who maintains that, well, even though you've been here for a while, but because you're still on your STEM OPT and your F1 visa, we still think that you are a non-resident alien, even for tax purposes. So we're not going to like deduct those taxes from your paychecks until you get on your H-1B. So I just wanted to ask, in your opinion, am I still eligible to ask for a refund from my previous employer who's withheld those Social Security and Medicare taxes? Because they sent me this IRS link, which I'd seen before, that explains that, oh, if you've been here for over 5 calendar years, you might not be eligible for those refunds. But I know a bunch of people who've like graduated and been here for over 8 years, and they're still like they're still getting their refund. So I just want to see like where exactly do I fall in that situation?
I think in those situations, it could be a lot of different things. So one is the friends or people you're talking about that have still got it is because if their employers did it, then their employers did it. And so they were able to get it. If your previous employer says, hey, we don't want to mess with it, then I think you could still go to get it back. You just have to do that 843 form that we're talking about and maybe get a letter from them, your previous employer, that says, yeah, we're not interested in going back and getting it. Because you got to understand too, when you're talking about third parties, if you are what we refer to as a withholding agent, so if I'm paying somebody, I have an obligation to understand whether or not I have to withhold taxes. If I fail to withhold taxes, I, as the withholding agent, am personally responsible for those taxes. So if you were to leave, skip town and take off or whatever, then at the end of the day, the IRS would come to the withholding agent and said, you should have withheld the taxes. We can't get it from her. We're coming for you. So some companies might say, I don't care what it is, I'm withholding them. And if you want to get them back, you go ahead and do what you want to do or what you can do to get them back. My understanding with the 5-year rule or otherwise is, think about this. And this is where you have this discrepancy between tax rules and immigration rules. And while in the textbooks, everything works out nice and peachy and clean, in the real world, it's oftentimes not that clean. My opinion is, if you are in the United States under a legal visa and you are doing what you're supposed to be doing under that visa, then everything else applies. So for example, if you're here on an F visa, and I don't care how many years you've been here on an F visa, if you weren't allowed to be here, you wouldn't be here, right? You wouldn't have an F visa. So if I have an F visa and I'm doing all the things that I am legally allowed to do under my F visa, and I have an OPT or a CPT or all that fun stuff, then yes, you are not subject to Social Security because it says you have the F visa, and otherwise I wouldn't be allowed to have this visa. So if the employer will not refund it, look at the forms we put in there and the instructions, and it's just you complete that form. I think you got to get a letter from the employer on their letterhead that says, hey, we're not going to go get this money. And then you'd apply directly with the IRS to get your share of the Social Security and Medicare back. And to your point, yes, like your current employer, as soon as you switch to a working visa, H-1B or whatever the case may be, then that's when the Social Security taxes would start. because you're
Right.
here under a different visa that's not FJM or Q, and you're here legally working under that visa, and welcome to the US social tax system.
Yeah, it's been quite baffling because I just want to make sure that if the amount that's been withheld for those particular taxes, if I'm eligible to get it back, then I get it back, right?
Yeah.
I wasn't aware when I joined my previous employer that I could actually be exempt from paying those taxes, or else I would have probably mentioned that, right up front, as soon as I began with them. But now I'm like, well, if I meant to get it back, I'd rather want to get it back. And so do I just have to like request them for a letter saying that, hey, because their attorney sent me a huge email saying why I'm not eligible and all of that. So they're really not like willing to budge from their opinion. And so do I what exactly am I supposed to tell them to get that letter from them? And what if like they just are not willing to provide it? What do I do then?
I don't see why they wouldn't be willing to provide it, because all you're asking for is a letter that says we are not going to seek reimbursement or refund of our portion of Social Security taxes. So it's really no skin off their nose. If they still wouldn't provide it, and this might even be addressed in those instructions, I haven't looked at them in a while, then I would, in your letter or application that you're going to request it from, you're going to tell the IRS, I tried to get a letter from my previous employer and they would not provide one. And that's why I haven't provided it. And that's all you can do.
All right. So I'm just going to need, again, just to wrap that up, just need like the letter from them. And then I need to fill out the 8843 form.
I think it's just an 843.
Oh, sorry, 843 form. Okay.
Yeah. It's on one of the slides that we have in there. I could pull it.
Yeah, and I've always been doing my taxes on like TurboTax and everything, and obviously not the best. So I did go to a tax consultant for this year, and I've just like mentioned everything to them. So they could just probably help me efficiently complete the process. But yeah, I just wanted to make sure that this was in the books too.
I would check. Yeah, 84. Look in those. I think it will tell you. We can check those instructions. It might do. I haven't been in there in a while. Okay, we will. I hope I have answered, so we can move to the next.
So we have, Steve, I believe we have time for one more question. It's 158.
Dia was one that I saw came in.
Yep, that's me. So yeah, I just have so two very quick questions. One is the exemption, right? So if the treaty says you have $5,000 exempt, you just write 5,000 in 1C on this form that you have out right now.
I'm sorry, one more time.
Yeah.
So basically, let's say I have a treaty that
I
says,
can answer it. I followed. So yeah, any income that you're exempting under treaty, you would put in 1C. But if you look at the text in 1C, it's pulling from Schedule OI. So when we go back to this, you would also need to enter and fill out this section, L1.
Got it. Okay. The other question I had is about tax residency, and I just wanted to clarify this because even my employer is having an issue determining this. I was here on a J1 visa for 2017 and 2018. And then I left the country. I came back on a J1 visa for a period of 2020 from March till July, I want to say. And then I came back since September 2020 on an F1 visa. So basically, in 2023, I should have like a total of 5 years. And after that, my employer says I go from being a non-resident to a resident. Would you agree with them, or because of the change of visa, does the clock reset? Because it's been really confusing me.
Steve, you want to chime in there?
I was looking for the button. Yeah, I mean, the change of visa is generally that's the deal, right? So yeah, for the first couple of years you're on J1, you'd be a non-resident under those rules, and once the visa changes, then the F gets the 5 years. So you weren't here as a, I guess, what was the J for?
The J14 was for an exchange program in a different university, different state, everything was different. And it was 2017, 2018. So when I came back on a J1 in 2020, I thought the 5-year rule would reset.
Well, the 5 years for students, so F, so like an
Oh,
F.
okay. So it only starts when I came with an F visa, basically?
Yeah, the 5 year for the student would generally be the F.
Mhm. Yeah, that's what I told them, but they seem to think that I'm wrong.
I guess it on the if the foreign exchange on the J, because it could be I want to double check the F and the J, but to your point, is it'd be any part. So you have 17, 18, and 20. That's the 3, and then you're talking about 21 and 22 would be the 5. I'd have to think about the J again.
Okay, no problem. I appreciate your help either way, and the whole seminar has been very informative. It's just that this is a bit confusing, and even my employer is a little confused by this, I suppose.
Not uncommon. It's there a lot of times. Don't get me wrong. We've been doing this for a long time too, and we get confused because the rules are they're very particular, and then there's a lot of gray areas because what happens is immigration and tax do not have to agree. And then there's positions that you can take, and depending on what you're doing and if you're employed and not. So there's a lot of things to consider, but it's, you got to look at what you have and at some point put your flag in the ground and say, this is my position. If they agree, they agree. Mm-hmm. And if not, then again, sometimes if the employer doesn't agree, if you have the position, you can always fix it on the return. Like we said, so the last, person we were talking with, the employer doesn't want to budge on the FICA. If you think you can get it back, go for it.
What complicates matter even further is that in 2017 and 2018, the exchange program filed the taxes for me. So I don't even have an idea what exactly they filed or what they did. And I tried to get those documents, but I haven't gotten anywhere.
You have to, this is Ann from Wayne State. You have to understand the difference between the intent of why you're coming to the United States. So a J visa, generally speaking, J, whether it could be a student or a scholar, it's for a limited time. And the scholars generally are sponsored by someone, and that sometimes means employment and you're getting financial benefits. Whereas F visas are just simply for studying. So that's how you look at the bigger picture when determining what it is that you're doing here, and the types of visa may determine how you're filing. So that just wanted to give you a bigger picture on the intent, because the US government immigration always looks at what is your intent? What are you claiming to be coming to do in the US? Are you, if you're J1, that could mean you're a student and a scholar and you're getting all these benefits. If you're F1, you're really just coming to study.
That's an excellent point that Ann makes. And a lot of universities and people like Ann who deal with this on a daily basis have a wealth of information in this regard, but that is true. You can get, confused in this, visa status or, what letter do I have? But it is absolutely based on intent of what you're doing. And this is where these gray lines come in, because you normally say, well, I have a J, but yeah, I should probably be treated more like an F, because really, they got me this visa. Maybe they did it because they backed in some way, or you have elements of both. But the main reason or primary reason that you came here was more as a student and less as a scholar. But yet the person next to you that has the exact same J visa, their situation could be primarily here as a scholar and secondarily here as a student. And so when you people talk back and forth to each other and you think you're the same, I'm telling you, you're not, because circumstances
many times, and that, Steve, usually is the confusion, because we have been trained by the U.S. immigration, and the U.S. immigration officers will tell you, what is your intent to come here? What is your intent? What do you intend to do in the United States? And the J scholars usually are sponsored by a company or a school, and they actually come and work. Now, J scholars can take a class but the intent is to do something different than when you come in as an F1. Now, F1 students can later on work because the OPT is a benefit of F1 visa. So that's the difference in the intent. And hopefully that helps you to understand that.
Immensely. It really clarifies the situation.
Sorry to butt in.
because,
Yeah.
in the 17 and 18 years, I was 2017, 2018, I was like here mostly to study. It was an exchange program, and all I did was study. I wasn't allowed to work, and all I got was like a stipend, but I was just studying.
You were a J1 student,
Yeah.
which is an exchange, and some people come as J1 as scholars. And that usually, even like, for instance, some of the Canadian doctors will come in and be sponsored on a J1 visa. It's a scholar visa, and scholars are intended to work. So there's a difference on sponsorship. So that hopefully the bigger picture, when I explain to students the bigger picture, they go, oh, okay, I get that. All right. Sorry to butt in.
Glad you did. That was a very, very good point. All right, I think we've reached our time.
We have. Thank you so much, everybody, for coming. I hope we helped you in some way. That is a lot of information that Steve and Josh gave us. And Anne, thank you for your input as well. I hope that you will check in the chat before you come out of this meeting. I have put the link to the invite to the March 25th Hello West Michigan event. So we hope to see you there.
If I get any questions, I just send them on to Steve or Josh. I always tell the students, this firm has been really great on answering questions, but it's between you and the firm what you decide to do if you file your taxes. So, and we really get a great response all year round. And I want to thank Steve and Josh for doing that all year round. We
Yeah.
get all kinds of weird questions, and they've been able to help. So thank you, and thank you.
You're welcome.
And thank
All
you.
right. All right.
All right. So have a wonderful weekend, everybody, and I hope to see you on the 25th of March.
All right. Well, I'll see you when I get back.
Thank you.
Bye-bye.
Bye.
Bye, everybody.